having a really big vision and a big goal, like a lot bigger than you think, right? In other words, it should be a little bit scary, right? So when Mark Ferris and I were first, we'd known each other for 5 years before we agreed to work together. So literally on day one, we had actually visited one of the assets that he co-invested in. And, he was like, hey, it might be cool just to meet in person because we do work remotely. We can grab some dinner, tour this asset, and then spend the day in the hotel conference room.
Sure.
And that's what we did. So it was like writing our mission, vision, values, our brand promises, like our 10-year goal.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Hey everyone, welcome to another episode. Now, before we get into it, if you've been getting value from this podcast, please do me a quick favor right now and subscribe to the show. And if you've got 20 seconds, I'd really appreciate it if you left a review. It's the easiest way to help this podcast reach more tech professionals who want to build real wealth without taking a second job. Now, let's get to the good stuff. Today's episode is with John Makarewicz, president of Ferris Capital Partners. In this conversation, we go deep into operator level thinking. We get into why best real estate operators just don't obsess over the investors first, but they invest really and obsessed over their resident experience. Because if you take that elite care of residents, the investor returns take care of themselves. Now, John drops so many nuggets around, culture and leadership, and we talk strategy and tactics. And John also breaks down his approach to building a high performance team and company, including how he creates clarity with a simple 1-3-5 plan, 1 goal, 3 priorities, and 5 strategies. He talks about reinforcing culture through those daily fundamentals and what it really looks like to run that portfolio with operational discipline, monthly updates, quarterly financial reporting, etc. And what I really liked that we explored was not just how that works in the company at kind of a corporate level, but how that actually goes down to the residential level or at the property level, where each of the property teams actually really embody that culture as well. I'm a huge culture junkie as far as learning about it, how to implement, and just really use it as a way to make decisions. Now, of course, if you have high income tech professional trying to decide between the DIY, do-it-yourself rentals versus passive investing with real operators, you're going to want to listen to this episode and get a lot out of it. If you want to learn more about John and his team, check out ferriscapitalpartners.com, and you can connect with him on LinkedIn. So with that, let's get into it. Hey everyone, welcome to the Path to Passive podcast. I'm your host, Steven Narita, and today I've got John Makarewicz here. Dude, John is a seasoned real estate operator and president of Ferris Capital Partners, 15 plus years of experience. John, I'm super stoked to have you here because just like we were talking about and learning more about you, you get deep into the operations and really have that heart for, having systems and processes and using, I think these are your own words, like, dog and a bone to really learn things and, make sure that you can go and solve problems. And I love your zest for learning and really driving to understanding things.
Yeah.
And by the way, the thing that we're going to talk about in this episode, in this conversation, is the goal that you have not to serve just the investors, which are absolutely important, but your goal to have and serve the residents there as well. So with that, John, please introduce yourself for our listeners and let's get into it.
Hey, Steven, thanks so much for having me. Excited for this conversation. But yeah, you nailed it. So I always share this. I went to Florida State for college and, I kind of chose it because it was the number one party school. And, to be candid, they also had the best film program. And so when I was in my high school years, I was wanting to become a film director. And when I got to college, I was having a lot of fun and, all that, but I was just kind of not really nailing it with the academics. And so after a few years, it was interesting. I was on a trip to Europe with some friends, and I had this almost moment of clarity where I just woke up one day and I was like, I'm just wasting my parents' money. And like, I need to come back home and reset and like really decide like what I'm going to do. And part of it is like, I just coasted through high school with A's and B's and can kind of, if I got a C, I could kind of charm my way to a B, or whatever. And all that to say is, I sort of stumbled into real estate. And I remember at the time thinking to myself, well, I'll just do this until I figure out what I really want to do.
Hmm.
And I had some friends finding success. So just selling residential real estate, and interestingly enough, early on, I was kind of embarrassed about it because, the reputation of real estate agents wasn't always strong. And my dad would keep coming to me and being like, well, when are you going back to college? And that actually became the fuel because I found I was really good at sales and I was making really great money early on. This was in the early 2000s. And, it actually kind of provided a drive because I was like, not necessarily because, my dad's my hero in a sense, but like I was like wanting to show him that, okay,
Hmm.
yeah, I screwed up here in college, but watch what I can do,
Yeah.
sort of mentality. And so, yeah, that's how it happened, sort of by accident. But very quickly, what I realized, and I think this applies across industries, but that reputation I mentioned that a lot of agents have, I was like, that's the opportunity. If I can
Hmm.
just communicate better, provide a better client experience, then I can really excel and sort of shine bright in an industry that maybe doesn't always. And to be very clear, there's many great agents out there, but you ask the average person, it's like used car salesmen, like ambulance chasing attorneys, and then real
Hmm.
estate agents, in some order, right? And so, what ended up happening is in '08, the Great Recession hit, as we all know, really started in '07. In fact, my income was impacted in '07. Days on market kept growing.
Hmm.
And the company I was working for just had their head in the sand. I mean, I could just clearly see it was just like, let's wait this out. And I'm not some economic genius, certainly not at that time, but I could sense this is not just a little recession we're dealing with. This is something different. And so, just by happenstance, I reached out to who became my future business partner, largely because he had billboards advertising his service during the recession. So I'm thinking, well, this guy must have something going on if he can
Sure.
still afford billboards, right? And what ended up happening is we developed a very close relationship, and we ended up, locking arms. And over some time, I earned some equity in the business, and he communicated with me. He had this big goal of selling the business. He had a number in mind, and it took us about 12 years to get there, but we exceeded that number by 25% and had a private equity exit in 2021. So
Nice.
a lot of lessons learned, a lot of hard lessons, a lot of stupid taxes paid along the way. But what
Mm.
I learned during that period is that I have a passion for systems and the operational components sort of behind the scenes of the business. And so it's interesting that business partner, my current business partner, tend to be the big visionary thinkers, and I have an
Hmm.
element of that. But I really like, you give me an idea and then I'm going to make it work. I'm going to make it better potentially, not in a negative context, but more like,
Hmm.
ooh, I like that. I bet I can
Yeah.
do this and this and this and make it even better, right? So, having that relationship, and that's something I tell people all the time, like, business is not a solo sport. I mean, maybe when you're an entrepreneur, sure, it's
Sure.
very lonely for the first few years, but the businesses that go from entrepreneurial to more organizational
Hmm.
usually get the team right, right?
Of
And
course.
typically you'll see there's a two-person team at the top, right? The maybe the leader of the business and like the trusted operator, or like the number two, if you will. And I actually like that place. I don't want to be the guy on the billboard. I don't want to necessarily be the person, with everything on the line. I mean, I don't mind sharing that, right? But I like being in that position of having the influence. And so what ended up happening is after the previous company, Mark Spain Real Estate, sold, after about 2 years, I wasn't happy. I think the company was not happy. And I had this moment. It's another moment of clarity, if you will, similar to the back in college days of, the reason I'm not happy is we are now managing the business. We're not growing and like, innovating as much, and it's not a criticism. The private equity company that bought us, we couldn't have asked for better partners. I don't really stay close contact with them. We still touch base occasionally, but it's just this thing of, it just became more about managing a P&L and L and not necessarily innovating and creating. So I've now
Stages.
learned that
Yeah.
I always have to be in a startup environment. Even if we've been in operations for 10 years, we're going to pretend like we just started yesterday and everything's on the line. Right. And so I've really enjoyed this new opportunity with Ferris Capital Partners, and we've acquired 7 assets in 3 years. We've never missed a closing. We've never missed a distribution to our investors, and that's certainly something I'm proud of. But we're just getting started, man. So I'm fired up for the next hopefully 15, 20 years in this new enterprise.
Yeah, I mean, I can tell you obviously have the energy for it, and I mean, it juices you up just thinking about that vision is. And
Yeah.
there's a couple of things that you mentioned that I really want to tease apart, and we'll get to. So, I just, stay tuned for that. But I want to peel back some of the things you're talking about, because I think it's really cool, as some character depth for John here too, because you came back from college but hungry, right?
Yeah.
That chip on your shoulder, like, this is what you're gonna do, right? And being good at sales and thinking about where the opportunity was, where the
Yeah.
opportunity of the real estate agents, and you give credence to that. There's a lot of great agents, a lot of great people in any industry, as well as people that also need some improvement, right?
Right.
there's
That's right.
that's where it is, and so we have to recognize both. But that's really cool to see the opportunity. And leading up to, what did you say? You said a couple different leaders, but one of the organizations was Mark Spain Real Estate.
That's
And
right.
the thing that I wanted to ask you, because I think it's relevant to many people listening, the tech professionals who, people that are, at these Amazon, the Netflix, the
Yeah.
Googles, these types of organizations, where they're not exactly early career, right? But they're
Right.
also thinking about, how do they add more value, right? And
Mhm.
this is kind of that play of adding more value, where I want to get your opinion at, which is seeing themselves not where it's a competition with other people, but it becomes a collaboration, and
Yeah.
identifying your skill set. So I wanted to ask you, how did you identify that you were more of that implementer kind of role? How did you identify that you liked being in this role that you're at? And thinking about that collaboration perspective of liking to be with the visionaries, but knowing that you like to do the processes and the systems and the implementation as
Yeah.
well.
It happened somewhat organically because when I called Mark Spain, this was in that Great Recession era. And, I was like, hey, are you looking to hire any more agents? Right. And serendipitously, like I learned that my mom's interior designer was actually his interior designer. So there was sort of like a little referral, I guess, that came across after I had reached out. We recognized there was some commonality. But what happened is I was selling real estate for him just as a listing agent. He was producing the leads. So I can dive a little bit more into Mark Spain Real Estate and what made us unique and sort of an acquisition target for private equity. But bottom line is we controlled the leads. So all those billboards, all the marketing drove the leads in. And so as an agent, I didn't have to worry about where my next piece of business was
Yep.
coming from. I just had to go out there and give a great presentation, follow up, and hopefully close the sale. And so with that, after about 6 or 7 months, my prior company was interesting because they had 4 listing agents and 30 buyer agents. Mark
Mhm.
Spain had 4 listing agents and 1 buyer agent. And so through some conversations, I was like, yeah, why do you only have 1 buyer agent? He's like, I just focus on listings. I'm like, yeah, but these listings generate buyer leads, right? And
Mhm.
he was talking with a consultant around that time. And he kind of said, look, John, I'm going to give you a piece of the revenue, just grow the buyer business. But by the way, you're going to keep selling real estate. And at that time, I had a kid who was, already a few years old and one on the way. And it's the Great
Mhm.
Recession, keep in mind. So I'm like, dude, I'll work 80 hours a week, whatever I can do to make an income for my family. Like, I'm
Yep.
not borrowing money from my parents. That's just not in me. It's just not something I can do. My father in law did pass a year or so ago, but we were one of only my wife has 5 sisters. We were like one of 2 that like didn't ever go to the family for money, right? And
Mhm.
that was something I was kind of proud of, especially during the Great Recession. But what happened is when Mark challenged me with this, I kind of really loved it, because bottom line is, I got a call one day. It was like a couple months in. He's like, "Hey, I'm giving this presentation, and part of the, people are paying to come to it. So part of it is I'm supplying our process manuals. Can you create a listing agent, buyer agent process manual?" We
Nice.
didn't have
Okay.
one, And by the way, the talk's in 2 days or something, right? And so just pulling that together and just that sense of satisfaction and thinking about each part of what we do and like what are the most important touch points and like what are the things that have to happen and how do we get the file to the admin to get the listing
Mhm.
online, right? And just thinking through those things. To some hearing that they might go, God, that sounds like a nightmare, but I just enjoyed it. And so you mentioned kind of that person at Amazon or wherever, right? These big, mega organizations where sometimes it's hard to stand out. What I learned early on is I just don't say no to opportunities or tough assignments, right? And so
Mm.
I think if you were to talk to Mark Spain, he said, that's it. I mean, John just never said no. Like if there was we had a builder contract where they had a ton of properties under foreclosure and their bank said, look, you got to work with a third party to list those. And they were nice people, but man, they were tough. Like they just were, they didn't return calls. I had
Yep.
to like go to their office some days, like, dude, I've been trying to call you for 3 days. Like, I
Yeah.
need you to sign this contract. But the rest of the team's like, I don't want to work with them. I'm like, give them all to me. I'll take them all. I'll figure it out one way or 10 others. And partly it was an economic motivation, as I mentioned, but I just like accomplishing things. So it kind of happened somewhat organically just by giving, or receiving these assignments and, that alignment around my goals and, wanting to have to me, money is about freedom and
Mhm.
choice. I'm not I mean, I live in the same house I've lived in for 14 years. I mean, we paid it off. Like, why would I move? Like, just more bigger house, more problems, more challenges or whatever.
Sure.
So it's not about having all the stuff. Like, enough, is a feast, right?
Yeah.
If you
Yeah.
think about it the right way. And so that's kind of the motivation. But yeah, a lot of it was just getting the assignment, wanting the opportunity, primarily driven by economic motivation, and then learning like, wow, this is fun. I like this. And then if you fast forward to like when we sold the company and I left,
Mhm.
the amount of messages I got from team members, and some, I interact with them on a daily basis, but others I don't even know that I ever met personally, but sending me these nice messages about, man, some of the things you shared with the team that I, pulled down from a sales meeting, or we had an internal team podcast, changed my life.
Nice.
And so hearing that kind of stuff, man, that's motivation like times 100 for me. Like just
Absolutely.
that ability to have a positive impact on people. That's really what drives me in a sense too. So when I think about Ferris Capital, we touched on this early, but the residents, like having that positive experience over here, our investors, like, making sure that they feel the love. I mean, look, I'm in deals right now. This one particular deal, I haven't gotten an investor update in over a year. And, the last one was good. Things were going great. It's a new build. There's 5 buildings. They're leased up. But it's like, I have no idea what's going on with my money,
Yeah.
and it drives me bonkers. Right.
Let me pause there for a second
Yeah.
because I really do wanna talk about that.
Yeah. Yeah. I
We
jumped ahead.
will.
My bad.
Yeah. No, it's good, it's good. I think I just wanted to check in with you there
Yeah.
because you're talking about having fun,
Yeah.
right? And also getting the impact from the internal podcast, the people that were part of, your team that sent you these messages. And, the reason why I just wanted to get your feedback on this one and just kind of have, ask you expand on it is because this took me like a bunch of time and I don't know how long, but to just really, dial into like, okay, like what I'm good at and what I like. And what I was hearing
Yeah.
from you is like what you good at, what you like is what you get the impact is, and you will make impact as well. So kind of staying tuned. Is that fair to staying tuned what you get at your like and keep on saying yes to all opportunities, but especially those that grow you.
Yeah, that's it, man, for sure. I love a challenge. I've actually learned that, if our business doesn't have problems, then I have a problem in a sense. Number one, maybe I'm missing something,
Yep. Yep.
right? But the founder of Patagonia, I'm not going to even attempt his name because I'll probably just butcher it. But he has this great memoir, "Let My People Go Surfing."
Yes. Hmm.
And he has a quote in there like a CEO's, job is to create crisis.
Yeah.
And, when you hear that, it's like, is that really it? But, he gives this example where, that company, I mean, his whole thing, he's passionate about the environment, right? Like it's his number one driving motivation.
Mhm.
So he went to the team. They were the most profitable clothing company in the world. And he says, look, we're going to actually start making our clothes with recycled plastic. And they were the first to do it, and it destroyed their margins. I mean, everybody was revolting. This is stupid. This is a bad idea. But over time, as more and more companies came in and started, manufacturing in a similar way, their costs were driven down. They had sweetheart deals because they were early in.
Yep.
And then they opened up a whole new, pool of customers that were
Mhm.
really outdoors people, but just were passionate about the environment, and, propelled their, career, right. Or
Yeah.
the trajectory of their company. So, being open to saying, hey, I know we've always done it this way, but we can do it a different, better way. And we're going to
Yeah.
do that. And, we're going to make this change. Right. And so, once again, I don't try to get in there and meddle with things that are working, certainly, but
Sure.
I like a problem. I like a crisis. And when things are going too well, I get bored. And when I get bored, it's dangerous, man. you know?
Yeah,
so,
understood. That's
yeah, yeah.
yeah, that's I heard this Bezos quote and just talk about, one of his mentors was saying that you have enough ideas to destroy the company.
Yeah.
And so,
And that is valid too, to be very
yeah.
clear, right? I mean, you have to know when to say, and it was interesting. I mentioned my VP of sales earlier, but she came to me one day because she was very compliant. I mean, she was a leader to her core, but if the boss said something, she thought she had to do it. And she brought
Mm.
that to me, and I said, oh God. So we came up with a little system where I'm like, this is just a thought. I'm not saying we need to do
Right.
this. What are your thoughts on this?
Right.
Right. And that was another valuable lesson is I learned that when you find the right people, man, they create the solutions. And then my role is just to kind of like go, okay, there's two options here. I think this might be the better path. What are your thoughts? Right. And so almost like kind of like, the judge or whatever of the ideas that come
Yeah.
through. So really, if I look back on Mark Spain real estate, people always ask me, what was the number one lesson you learned, man? It was like, slow to hire, spend all your time building the team. If you're an entrepreneur and you get like your first 4 or 5 hires right,
Hmm.
then like everything else kind of will take care of itself. I mean,
Cool.
it's not quite that simple, but it's pretty damn close.
Yeah, having strong teams, certainly.
Yeah.
So walk us through those points because we have a lot to talk about. I only have you for the next maybe half an hour here. And so I think, you've got some really great nuggets. So let's let talk to us a little about what you're doing now, right?
Yeah.
And specifically, a couple of these points, as many as you want to drop in here, but talk to me about what you're doing now, where you
Yeah.
guys are doing business, what your focus is on now. I talked about the residents, right? And then all the way here, the fourth one, if you can remember, is you talked about building vision, and
Yeah.
I was doing research, heard you talk about how you went through department by department to build out this vision, right? I
Yes.
want to hear a little bit about how you went about doing that and how did that go on the execution to building that along the way?
Yeah. So, in terms of what we do, so Ferris Capital Partners, and this, I'll go back to Mark Spain Real Estate. One thing I learned is you do one thing and you do one thing really well in a business, right? So at Mark Spain Real, it was residential resale real estate. I say resale because we would get banks calling us about taking foreclosure business or a new construction builder saying, hey, do you want to take these 200 homes and sell them for me? And even though yes, it's residential real estate, it's just different, right? There's different systems and processes, expectations, and for example, new construction on site, you have to man the site. What if somebody gets sick? Who's going to
Yeah.
fill in for them? And so we just worked directly with homeowners that were reselling their residential home, right? So Ferris Capital Partners, we invest in apartment buildings. We typically target 80s, 90s, and early 2000s vintage. We have made one exception. We found a great deal that was 70s vintage, but all the mechanicals had been replaced. The roofs had not recently, but we negotiated that into the deal. And there was some things about the submarket we really liked, but that's not a habit we're going to get too into. It just was a great deal and we got it at a great basis, and it's going to be a huge win for our investors, but it's not something we're going to make a habit out of. So 80s, 90s, early 2000s. And what we do, of course, is we raise capital from investors. Mark and myself personally put our own equity into the deals as well. And early on, Mark and I, both invest in real estate, but we're also newer to this, right? And so we went out and found somebody with 20 plus years experience in asset management. Our acquisition director, he's actually our VP of acquisitions, has 15 plus years experience, transacted over $1.2 billion in transactions in his career. So we surrounded ourselves. I mean, I can go on marketing,
Hmm.
finance, but we built a team. So we had the ability to do that because of our other successful prior businesses. So, first and foremost, we built the team. So initially we started in Florida, just a lot of population growth. Interestingly enough, we filled the deal, we closed it, but a lot of our investors were giving us feedback around things like hurricanes and, things
Hmm.
of that nature, extreme weather. So we then went up to Charleston. Now, Charleston can get some hurricanes, but the probability is a lot lower. But Charleston, we filled it so quickly. And it was like kind of interesting because a lot of our investors are Canadian. And in our mind, we're like, we have to pick markets they're familiar with, but that's not the case, right? And so now we have 4 assets in Charleston, another in Atlanta. We have one in Jacksonville and one in Venice, Florida. So we're now looking at Dallas, Fort Worth. We're looking in Tennessee, Charlotte, Raleigh, a little bit in Indianapolis. The weather kind of freaks me out a little bit just because if you have a bad year of snow and your snow plowing goes up $100,000,
Sure.
like there's risk. So all that to say, generally speaking, Sunbelt markets, we generally look for at least 5% population growth projected over the next 5 years in that submarket. We look for job and economic diversity. So
Hmm.
not one or two major employers driving all the employment. Charleston, yes, it has tourism, but defense, you got one of the busiest ports on the East Coast,
Hmm.
logistics, technology, right? So if one industry is impacted in a recession or, by, economic headwinds or whatever, there's other jobs available. And then affordability is a big component. So 35% rent income ratio is typically what you hear. We look for 30% after our renovation rents. Now, we might do 32, but we want to keep affordability really top of mind. And then on the resident side of things, right? And this was something we kind of knew going into it, became crystal clear. I think about Costco, right? So, Costco, what do? They say, look, we're going to hire the best people. We're going to pay them well. We're going to treat them really well. By doing that, the customers looked after, right?
Hmm.
Because we have great people that are happy to show up to work every day. I mean, Costco gave people raises during the pandemic and
Hmm.
during the Great Recession, right? And in turn, those customers look after the shareholders, right? Southwest Airlines had a similar
Yep.
philosophy. So when we thought about that, we're saying, well, really, the customer is the resident, because if we don't get residents in the door willing to pay the rent we're, marketing, willing to renew and stay and refer friends and family, then our
Nothing
deal is at
happens.
risk, right?
Yeah.
Yeah. So, hiring a great team, number one, taking great care of the residents, number two, and then the investors are looked after. Now, we think about our investors all the time. We guarantee monthly updates on the 30th. We do a quarterly update, of course, 4 times a year at the close of the previous quarter. That's a little more robust with, financials compared against pro forma. But every month we're sending out an update because Mark and I have personally experienced investments where, I have to chase somebody down to get an update, and that's
Sure.
very frustrating. And there's much more to it than that, but that client experience across our residents and investors is top of mind. But the focus is on the residents in a sense. And so when we frame our goals for the year, for example, in 26, we want to create the best living experience for 500 new residents, right? So that looks like 5 or 6 acquisitions, depending on deal size. So, yes, that's a goal, but the main goal is that living experience being absolutely exceptional. So,
How,
quarterly check-ins at the property level. Go to every single property on a quarterly. We tell the team 2 of those will be unannounced, and we say it with
mhm.
love, but like we're just going to show up one day, because I don't want to have that experience, because I've had it before where I show up and like there's 17 people blowing everything, and I'm like, I'm
Right.
like, is this the usual experience? No, this is because I'm here, right? So I get that's going to happen when the president of the company shows up, but when they don't know I'm coming, I just want to see what it looks like.
Yeah.
What are the opportunities to improve? And unless it's particularly egregious, we're not screaming and yelling. We're just saying, look, I picked up 17 cigarette butts. Like, we got to get
Hmm.
the maintenance team on this. Like, this is not, our values. This is not our mission. Now, you mentioned values. So I wish I could remember the author's name, but if you look this book up, it's easy to find. It's called Culture by Design. And it was interesting. I just happened to be at some event he was speaking at, and it really stuck with me because he said, when you talk about values at a company, and there's like 10 people, yeah, everybody can kind of wrap their heads around it. But we saw it at Mark Spain Real Estate, where as you grow and you have offices all over the country, not everybody knows what you mean when you say operational excellence. Like, what does that
Yes.
really mean, right? And so this book has this concept of fundamentals. And so I ran with it. So at Mark Spain Real Estate, we had a set of 35 fundamentals. We're actually up to 37 at Ferris Capital. They're different. There is some crossover, but things like show up on time,
Hmm.
embrace change. We don't just follow the status quo. I can kind of keep going, but it's really sort of the behaviors that define the values. And
That's
so
so
what we do,
important.
it's huge, man. And so what
Yeah.
we do is on our morning huddle, we start we start at the first one. Every day we do a new one, and as soon as we finish, we start back over again. So every
Very
day we
cool.
start with a fundamental. I send out a Friday update email to the team with some good news, some wins, some
Nice.
challenges that the company's experiencing. And so if George, our asset manager, I'm like, Georgia did a great job this week embracing change.
Hmm.
She did XYZ and honored our commitment to provide, honor
Yeah.
commitment is another one, honor our commitment to provide the best living experience in the world. Put those things in bold. So just hammering it home, talking about them all the time. And it's not the only part of building culture, but it's a huge part of it because everybody knows exactly what we mean when we say first class service,
Exactly.
so that's an exercise if you're a leader, even in a department, right? Or having fundamentals for your family, right, could even be something you think about, like how does this family deal with adversity or change or whatever, like what are the things we
Mhm.
do. So having that exercise, it took a good couple of months to get the first draft of the Mark Spain real estate done. I kind of wrote them myself, I distributed them to the team, got some feedback, added a few, made some edits, but posters on the wall, all that stuff. I mean,
Yeah,
it has to be up front and center. And then the bottom line is you got to do that stuff, man. You got to
absolutely.
do it 100% of the time.
Do you curious? No, you're talking about these different properties, looking, from, Atlanta,
Yeah,
Jacksonville, South Carolina, et cetera. These fundamentals, or really these principles, if you will,
yeah,
right?
that's right.
Um, you know, are these part of? Are these down? Do these make it down to like the property level, or
Absolutely. Up
that's
and
what I'm
down.
curious. Like,
Yeah.
how does it go? Or is this just at the quote unquote corporate level?
Yeah, yeah.
Talk to me about
So
that. Like, how else how does this show up? Because I'm a huge advocate leadership principles. There's the doctrine of the leadership principles at Amazon. I'm building them for my own, Arita Capital as well.
yeah,
I did some internal stuff about this too. I think culture is where it's at, right? So
yeah.
I'd love to hear more from you about this, how it even makes it at the property level too.
Yeah, it's interesting. Even those Amazon principles you're talking about, we saw them and they were so good. We had posters in our offices of those as well. I mean,
Nice.
credited to Amazon, but just, it's like, shoot, why reinvent the wheel? This is good stuff.
Hmm.
But how it works is so right now we're working with third party property management. And so in the interview process, we went to all the top, companies that, had, locations in all the markets we serve, right? So we
Hmm.
could single source. That was the goal. We started with two and we kind of tested them each out. We ended up selecting one. But right out of the gate, we told them, look, like, we're not going to be your typical operators. Like, in other words, like the team members on site are going to be wearing Ferris residences, polos, not, your company name.
Hmm.
We have mission, vision, and values. Like we have training that we want to implement. Like,
Nice.
if that doesn't work for you, that's okay. But that's what we need. That's what we're going to need to commit to working with you. And so we've really found a strong team. The regional manager who oversees all of our properties for this company is effectively part of the team. I mean, her paycheck comes from this company, but she's in team meetings, like,
Cool.
and we're just like very close. And so Mark and I actually meet with the entire property. I mean, every manager, leasing manager, maintenance supervisor on a monthly basis. And we do like a 1 hour training. It might be like, here's some concepts from a book that we just read. We
Hmm.
might spend a whole day just talking about our mission or our values, right? Or those fundamentals I mentioned.
Hmm.
Our values for the company are the same at the residence level. So we have Ferris Capital Partners and Ferris Residences, which is what we brand our company. So those posters are in the wall in our leasing centers, right? So
Awesome.
part of our walk tour that we train on is like, you're going to stop and show the potential resident these values. We also implemented some guarantees, which we can get into, but just that idea that like it's all the same, even though, yeah, you work for Asset Living, you're part of the Ferris family. And like, this is what we expect. Now, when I say that, it's not like this is what we expect. It's like
Yeah.
more like that
This is the
genuine love of
standard.
people. That's right, exactly. And so our genuine love of people is our first value. And so what I've learned is that you can't really train that, right? So we also get involved in the hiring process for those property managers and leasing managers and maintenance. We leave it with the company to bring us 2 or 3 candidates, but then we
Hmm.
meet with them, and so we have to sign off on any of those hires. So that, but visibility, man, that lead by walking around, right? When I used to work in an office, it was quite literal, but now it's like, I got to get on a plane, but I'm going to go out and I'm going to spend time, spend a couple days with the team, just go out to dinner with them, get to know them
Yep.
on a personal level, know what's going on in their life, and care, because I do, I have a big heart for people, man. I think that, people have largely been, I mean, why I've been successful in life. Nobody does it
Yep.
alone, right?
Yep.
So, I think part of it, just great business partners that also shared that philosophy. So yeah, hiring for our values is kind of a key component there. So yeah, it's not something you can just write, put on a poster and forget about, man. You
Yep.
got to talk about it every single day and
Yeah.
live it personally, right? Like if I say show up on time, but I'm 15 minutes late to every meeting, then everybody just got permission to show up late.
Exactly. So that's super cool. Not only do you have it at the meetings, you rotate through them the end of the week, kind of as well. I'm sure there's things internally on review type of stuff as well.
Correct.
How
Yeah.
do they do that? Of course,
Yeah. Grade them
and then
against those. That's right.
yep, and then the recognition and as well, and talking about how they're embodied, how actions are done, right, all the way
That's
down to
right.
the proper level. That's super cool. Let's pivot a little bit then to how you think about growing companies, right? You've
Mm.
talked about this from vision, right? You have started with, I don't know, it was single digit or low real estate agent numbers,
Yeah.
way back when, and it
Yeah.
was like over 200 plus, and then you and Mark did this again for the capital partners where you're at now, right?
Yeah.
Doing like thinking strategy of department by department. I'm curious, how did you go about doing that to build the vision for where you guys are at now and what you're building?
Yeah. I
And
mean,
how's that going?
yeah, I mean, for the first thing, and it goes back to I've just been, I guess, fortunate in a sense with my business partners, but having a really big vision and a big goal, like a lot bigger than you think, right? In other words, it should be a little bit scary, right? So when Mark Ferris and I were first, we'd known each other for 5 years before we agreed to work together. So, there was no dating process. We already knew each other really well,
Mhm.
but we literally on day one, we had actually visited one of the assets that he co-invested in. And, he was like, hey, it might be cool just to meet in person because we do work remotely. We can grab some dinner, tour this asset, and then, spend the day in the hotel conference room.
Sure.
And that's what we did. So it was like writing our mission, vision, values, our brand promises, like our 10-year goal. And
Mhm.
so we set a 10-year goal of raising $1 billion in capital. And we might fall a little bit short of that, but guess what? I'd rather do that and hit 800 million
Yeah.
than, say, well, let's do 250 million and hit it,
Yeah.
right? Or
Yeah.
exceed it by, 100 or whatever. So, I mentioned with my prior guy where he had a number. He knew he wanted to sell this business. He wanted to build something, and build legacy wealth for his family. And he knew what that number was. We talked about that number almost daily, right? It's like, what's that? How is this going to get us there? Right.
Yeah.
And every decision we made was based on that. So, at Ferris Capital, it's interesting because it's very simple at the end of the day. It's like, okay, if we're going to raise $1 billion in capital, what do we need to do? Okay, so there's three things, right? There's acquisitions. We need to find deals, right? And right now, and this is largely the market, but we have to receive 300 deals from brokers to find one that we put under contract. So
Mhm.
then we say, okay, well, what's the math on that? How
Yeah.
many opportunities do we need to receive in order to hit that goal to get those units? Then we've got to raise the capital, right? So
Mhm.
how many investors do we have to talk to, and what are the things we need to do to ensure that those investors not only invest once but they invest two, three, four
Mhm.
times? We're pretty proud to say we're a new company with no exits. 38% of our investors have already reinvested with us on subsequent deals.
Very nice.
So, looking at that and then looking at that list and going, okay, who are the investors that are the influencers sending us referrals? Can we surprise and delight them with a gift, right? So, that's number two, the capital raising. And then the third thing is how do we take those assets, execute the business plan, and ensure that we successfully exit at the value we anticipated, right? So everything just becomes a factor. Is it one of those three things? If it's not, then it's a distraction. It's not something we really need to be doing.
Mhm.
A great example, this goes back to Mark Spain Real Estate, but we thought about building an app at one point and we spent time on it. We invested some money in it. And then one day we woke up and realized people are exhausted with apps. Nobody needs an app. Nobody wants another app. Like, why don't, we're not a tech company. Like, we're hiring developers and stuff. Like, forget it. Just push it aside, because if we just really focus on client experience, then everything will take care of itself. Right. So
Yeah.
being very clear, like, so for me, when I set an annual goal, a 10-year goal, whatever, there's one goal, there's three pillars or priorities. And then underneath that, you can build out the strategies. So for me,
Mhm.
like this year, I have 5 strategies underneath, each one of those pillars. Now in my role, my pillars are basically what I said, but it's operations, client experience, and resident experience. So underneath each one of those, I have 5 strategies that I've written out for this year. So it could be things like right now, I think our data is a little bit spread out. We got like different platforms, and it's like I got to wait, where's that? Oh, that's in HubSpot, or I got to log into this platform.
Yep.
So building out some business intelligence software to pull all that data into one place, right? So that's an example of an operational thing. On the resident experiences, we want to build out like a learning management system for the property managers. We meet with them, we talk about this stuff, but it should be something that's interactive that they
Mhm.
can go back to and refresh on. So that's a Q1 initiative to kind of build out Ferris Academy for
Mhm.
those property managers. So when you have that clarity on the big goal, and then you have the clarity on like the three most important things to help you reach that goal, then it's not that it becomes easy, but it becomes easier, right? To
Yeah.
decide, is this something we should do or something we shouldn't do? Keeping in mind the one thing we do is we buy value add multifamily buildings. We don't do storage, we don't do car washes, we don't do
Hmm.
industrial, just one thing and do one thing really well. And that's kind of how I would think about growing a business, right? Residential real estate, what do we do to make it the best experience, right? How do we make sure our team is prepared and ready and will maximize their conversions, right? All those things, it just becomes simple when you have that clarity. So try to beat your business up in such a way that you have that one goal and the three things that are most important to help you reach that goal. And then that clarity will help you decide what's important, what's, a distraction or a shiny object.
Definitely, because that also becomes classic Pareto, right? That's your 20%. I
Yeah.
mean, of things like, I'm sure we talked about the amount of ideas earlier too. You could have 4 and 5 and 6 and 7 stuff as well, but those kind of three categories, and you said 5 strategies, but
Yeah.
those
That's
are kind of like
in an
5
annual
goals.
context. I like that. So I learned it from, I think it was from Gary Keller from Keller Williams, but you call it a 1-3-5 or a GPS. So goals, priorities, strategies. 1-3-5, one goal, three
Nice.
priorities or pillars, five strategies. And what's beautiful about it, if done correctly, it's a one-page document. So it's
Mhm.
printed out like where I see it and look at it every day. And I'm like,
Nice.
oh yeah, I did commit to getting surveys rolled out quarterly, and it's February. I better get on that, because look, stuff happens. You find a great deal, and next thing you know, we're spending a month and a half on due diligence, but you don't want to lose sight of those important things. So
Mm.
that's simple. And I'll give a story, but at Mark Spain Real Estate, the first year, Mark actually challenged me with creating a business plan. It's like I found a template. I designed this
Mhm.
beautiful 20-page document. It's like all these things we're going to do. And he's like, this is really great, John. He's like, can you make it one page? And I was
Right.
like, yeah, yeah. And guess what? I can't remember what author said this, but it's like if I had more time, I would have written a shorter letter. He was like
Alright.
writing a letter to a friend, right? Editing is hard.
Yeah.
Choosing between 20 things to get down to 3 or 4 is hard. And so this GPS 1-3-5 for me for 26 was something I had open on my computer every day of December. And I'm still looking at it today going, is that really it? Or should I tweak it a little bit? So it's not something you do in 2 minutes or, an hour. It's something you kind of wrestle with for a period of time. And then each team member, so if you're a leader of a division or department, you have one, but if somebody's reporting you, they have one. So everybody has it, but it all feeds up to that main goal of for this year, onboarding 500 new residents and providing that best living experience. So um, even in our level 10, our weekly meeting, we have what we call the level 10 meeting. We always start off with our 10-year goal, just an overview. Like, here's
Mhm.
what we're trying to accomplish. Here's what we're looking to do. Here's the impact we want to have. Like, all right, now let's start the meeting. Right. So just constant refreshing reminders of what we're doing and why we're here.
I'm hearing the different things, and it's obviously put it all in the blender, hit blend or whatever, hit high and go. But
Yeah.
you're talking about, you mentioned second into command. I've heard you talk about vivid vision. You're talking
Yeah.
about level 10 meetings. I'm like, EOS,
Yeah.
here
Yeah.
and there, and Gary Keller, the one thing, and
Yeah.
all this kind of stuff. Obviously, the experience, which is really where you got a lot of the implementation, of course. But it's hearing these different resources all put together, taking the pieces out.
Yeah.
Super cool. Yeah.
Well, they say education's wasted on youth. I read 62 books last year. It's almost interesting. Like, I'd love to go to college today. I just didn't have it in me at the time, And so, yeah, it is. You're not wrong. It's like, I like that idea. Let's pull that into the
Yeah.
recipe. I like this idea. Let's pull this into the recipe. EOS, you're dead on. The
Mhm.
huddles, the level 10 meetings, that's all EOS language. The Gary Keller One Thing book. I mean, being in residential real estate, we were actually affiliated with Keller Williams for a while, and Mark was actually in Gary's top 10 agent mastermind, so the top
Nice.
10 producers. So he got a lot of time with him, and that's where a lot of the stuff that I mentioned around hiring, where Gary was like, when my company propelled itself is when I learned that I was the wrong person to grow it, and I went out
Mhm.
and found 3 people, like Mo Anderson, Mark Willis, and I'm trying to remember the third person's name, and he's like, they changed my life and trajectory of my company forever. And so for me, why try to, bang your head against the wall and create something when the knowledge is out there, and then, whatever works for you, because we're all different. My behavior is a little bit different than yours and different from the next person. So finding the things that add value to me and in turn add value to the company. Yeah, I mean, it's, but borrow, right? If you find a
Mhm.
good idea, just run with it. I would say it's interesting. I invested in this startup. It's a AI tech company that helps, logistics and freight companies manage the high volume of invoices they receive.
Cool.
So it's taken off. The revenue's growing. It's been quite good, but they hit a couple of walls. And as an investor, I was just on one of the calls and I just asked about their meeting rhythms, and they're like, "Oh, don't really have meeting. What does that mean?" And
No.
so I just sent them a document like, "Here's what we do. This is what I would recommend." And when I connected with the CEO a few months ago, he's like, "Man, those huddles in and of
Oh yeah.
itself changed everything,
Yeah.
because they're a remote business." And so just the ability to connect, talk through the number one priority for the day, their metrics, like any challenges or stucks, 15 minutes. And he's like, that alone changed the trajectory of our company. So EOS, right? You mentioned it, but what is that? Gino Wickman, I think's
Yep.
his name.
Yep.
If you're listening to this and you're interested in learning more, check it out. It's a great book, but we implement a lot of those strategies.
Yeah, good call, dude. Yeah, yeah. The vision traction organizer. You mentioned the 10-year goal. The 3-year, the 1 year, etc. Anyway,
Yeah,
anyway.
yeah,
Um,
yeah.
good stuff. Look, one thing what do you? I got two questions left for you. One is, we spent a lot of time talking about some really cool, not only high level things, strategic, but also the tactical, right? And
Yeah.
it's kind of fun going back and forth between, that range of things. I've enjoyed it a ton. And you know, what I'm kind of curious about is talk to me about investors
Yeah.
today. How do you think about serving them? Because we
Yeah.
talked about residents. What are your thoughts about you have what are the things that keep you going, to serve investors today?
Yeah.
You're however you want to answer that. Does that question make sense?
It does, yeah, for sure. So I think for me, personally, so if you keep in mind, I started my career like 4 years prior to the Great Recession. So I saw, all these, tailwinds turn into headwinds almost overnight. And around that time, and I switched to working with Mark Spain. Had actually just finished this process of liquidating his rental properties. And I asked him about it, and obviously it's like, okay, well, the market's collapsing. That's
Yeah.
probably part of it. But he said, well, look, he's like, my financial planner pointed out that all my income is tied up in real estate as a real estate operator. And so if all my investments are in real estate, if there's a real estate recession, I'm in trouble, right? And so I listened to that a little too closely. And so over the years, I didn't buy real estate. And so from like
Mm,
'08 to 12, I think back, there were times in that market in Metro Atlanta, for example, you could buy houses for $35,000, $45,000 that are now, the land's worth $500,000, right? So you just go, God, if I just bought a couple of those,
yeah.
right? And so, that regret we hear a lot from investors. I wish I had bought more real estate sooner. And sort of like the Chinese proverb, like, when's the best time to plant a tree? 20 years ago. When's the second
Yeah.
best time today?
No.
It's
Yeah.
kind of how I think about investing in real estate. So when I think about maybe go back 15, 20 years, like these kind of deals that we offer at Ferris Capital weren't really readily available, even for accredited investors. It was kind of all institutional private equity. And so, in a sense, the way the rules changed with the SEC with these syndication deals, it kind of democratized things a little bit. And before we started really diving in, you made this great point, right? Like so many people we talk to either already own a rental property or two or an Airbnb or whatever. Well, where I live in Atlanta, I like to go up to North Georgia and the North Carolina mountains. And within like 5 years, kind of starting in the pandemic, the amount of options for Airbnbs like tripled. I'm like, it was
Mhm.
almost hard to pick a house. I was like, oh, they all have hot tubs. They all look great,
Yeah.
like good mountain views or whatever. And now when I go up there, they're all available. And so, you have a lot more risk when you own one of a thing, right? So if the, tourism market suffers where your Airbnb is, you're not getting the bookings, right? If you maybe have a rental property and the resident just chooses not to pay rent anymore, now you got to evict them and maybe they trash the place on the way out the door. The scale of an apartment building, right? I have 120 units or whatever. I kind of expect 5 or 7 of them not to pay their rent in a
Yeah.
given month, right? And it's kind of baked into I mean, it's not kind of, it is baked into our pro
Yes.
forma. We expect a certain amount of bad debt and evictions. And so your risk is so much lower. So on most of our deals, our break even occupancy in year one is like 65, 70%. In some cases in year five, all the way down to 55, 60%. So
Awesome.
there's a level of safety that comes with that. And then when you buy in the right areas with population growth and all that, it's never guaranteed, but you'll have the affordability component as
Hmm.
well as the market, right? The people to actually rent. Another factor that I don't think a lot of people think about is even if professionally managed, if you own a rental property, you're working a couple hours a week on that, right? You own
Yeah.
5 or 10, you have a part-time job, maybe even a full-time job. And
Mhm.
so for somebody who's making 300, 400, $500,000 a year, like calculate your hourly worth, right? Do
Yeah.
you really want to give that up to go deal with a water heater that breaks in the middle of the night, or you're on vacation and you find out your resident, skated in the middle of the night and left the back door open on the way out. And by the way, as a residential real estate agent, I actually was the first person in the door when somebody in another state had a rental property and goes, my tenant isn't returning my calls. Can you go check on it? And finding the
Mhm.
place completely demolished, right? And so it's not to say not to do it, but just understand there's risk associated with it. Where if as an investor you find a really great operator, whether that's us or somebody else, you build that level of trust with them, spend a lot of time. Don't make a fast decision, right? Most of our investors we talk to 4 or 5 times before they invest. I mean, we could spend 5, 6 hours just getting to know them and their goals, but sharing with them what we're up to and what our deal looks like. So make an informed, wise decision, but you can get those returns without the work involved, right? That hourly commitment on a weekly, daily, monthly
Mhm.
basis. But you also, get the passive income coming in, right? I mean, that's the main thing. Like a lot of our investors, like, I mean, they're getting distributions on a monthly basis. It's mailbox money, right?
Yep.
So that's for me. It's like if you're kind of in this place where I was 7 or 8 years ago, where most of my investments were in the public markets, and I started getting a little more into real estate. Like I would never suggest 100% of your wealth should be in real estate, but certainly a percentage of it should be. Everybody will have to make that decision. But what I think a lot about is, for example, when the tariffs were announced, I think it was Bill Ackman or one of these, super smart billionaires posted something on Twitter that basically, or I guess X now, that basically said that Hertz used rental car fleet is now worth $1 billion, right? Because, of course, with the tariffs, the cost of used cars is going to go up,
Mhm.
and their stock price went up by 100% the next day. you know and so like a tweet can like impact the value of my investment up or down so dramatically. And
Mhm.
if you kind of take a moment and pause and you say, well, that may be the case, but they have to recycle their inventory occasionally and buy new cars into the fleet, so they're going to be paying more for those. So is it really like,
Yeah.
and so, I don't think he meant anything by it. It just was, hey, I'm going to just pound out a thought at like 10 at night or whatever, but the stock value goes up. In that case, great. But it also,
Yes.
normalized quickly soon after. And so a hard asset, right? Like, a recession isn't necessarily going to change the value of my building if I can maintain rents, right? And I'm not sorry, rent, housing is a core human need. And so will there ever be a time where people say, you know what, I don't need shelter anymore? No, of course not. So bought wisely in areas with supply tapering off, or for example, we have a deal in Noonan, Georgia. In Noonan, it is almost impossible to get an apartment building approved. You can do a build to rent, but your cost base is going to be so much higher on that single family build to rent. So we're offering a 3 bedroom, 2 bath townhome at $1,850 or $1,950, depending on the floor plan. It's $2,500 down the street at the brand new build to rent. So
Right.
we're providing something that feels like value because it's lower cost, and it's beautifully renovated with all the same bells and whistles. Yeah, it's 15 years older or 20 years older, but it's got granite countertops, stainless steel
Mhm.
appliances, like beautiful floors, everything's painted, designer light fixtures.
Mhm.
And so, that scale that apartments provide, I think is why I like that asset class, as well as the necessity for shelter, right? Where recession hits, people might empty out the storage unit and put the stuff in their attic or, garage or whatever, right? And just, sacrifice a garage bay.
Yeah.
And so that need and that, like, demand for housing is a big factor for us as well.
Yeah. I simple question, great
Yeah.
answer. Thank you. And I think, there just to kind of just to close off that whole thing, the thing I heard, part of the through line there is, I'm sure you can agree, like the idea of a well done business you're talking about way earlier is solving, one focus,
Yeah.
and this multifamily apartments, value add places that are already cash flowing, is one customer, one problem, one solution. Get good at it,
Yeah,
right?
that's right. That's it. I mean, look, Amazon, right? Yeah, now they have AWS and they're getting into medical and all this stuff, but their core business, it started with books, but it's just, deliveries to your home, making it easy for the customer to get the product they want, right? And I will admit there's been times where I'm like, I need to wean myself off of Amazon. So I'll go to like the vitamin shop or whatever to get my protein powder. And it's like $10 more and they don't have the flavor I like. And I'm like, all right, well, I'll just go on Amazon, click a button, it'll be here in 4 hours, And so, they built an incredible product. And now at this stage, they've decided, okay, we can start looking at other business opportunities, right? But they got that thing right first before
Yeah.
they did anything else. And I think that's, kind of the lesson there. So, I have no desire to build like a mega corporation, right? Like I like being close to the people, close to the problems, close to the residents. But
Hmm.
that even in those bigger businesses, they always started with one problem, one
Exactly.
customer, and one idea, and then
Exactly.
eventually expanded into other things, right?
Yeah.
And it's not like the same guy who's running Amazon deliveries running AWS. It's a whole different. I
Exactly.
mean, it might as well be a different. It's a portfolio at this point,
It
right?
is.
They
Mhm.
own a bunch of different companies under one umbrella. That's what it really is.
Yeah. I would ask you, I'll ask you anyway. I mean, you're a little bit past here, but do you have something that you're currently going through book wise or course or whatever? I'm sure there's a bunch of things you have, your eyes on, but is there something noteworthy that you feel like sharing right now before we close out?
Yeah. I mean, look, I would say that, whether it's Audible podcasts or, reading, I will say I'm a big proponent of books. Like, I think there's something meditative and sitting in a chair with a book in
Yeah.
your hand. It just feels nice and the smell of the paper and all that. But I do supplement with Audible as well. And so you know, just surround yourself with information. And right, it's this idea where, you've heard the saying, right? You're the sum like average of the
Mhm.
5 people you hang around the most with, right? But now with technology, I can kind of hang around with Warren Buffett, right?
Right.
Or, and these brilliant people. And so learn from them, right? So podcasts like Charlie Munger is somebody I'm really digging into now. I just picked up Poor Charlie's Almanac and
Nice.
been seeking out podcasts that, people are sharing his quotes and knowledge and things
Mhm.
like that. And so, yeah, just, growing, right? Growing pains, right? We're all familiar with the term. When you grow, it's painful, right? And, it can be uncomfortable, right? And so, challenging yourself, allocating maybe 30 minutes in the morning to just, read, pick up a book or even just put an Audible and zone, like close your eyes and
Mhm.
just absorb. But, I think that, if a couple of things, and I'll end it with this. I think if people, wean themselves off social media, stopped watching 24-hour news and read more books, the world would be a much better place. I'll just leave it there.
I'll clip it.
Yeah.
John, I enjoyed this immensely, dude. A lot of
Yeah.
fun. Thanks so much for sharing about you, the story. Like I said, strategy and tactics. We went all over the place. It's fantastic stuff. Tell us where people can go to find out more about you and team. Obviously mentioned Ferris Capital Partners a couple
Yeah.
times, but where specifically would be the best place for them to learn more about you guys and where to connect with you?
Yeah, absolutely. So ferriscapitalpartners.com, that's FARIS. There's actually a link. You can book a time with me directly. LinkedIn, I'm always on there. So if you want to, connect or talk about, maybe investments or just business principles, some of the things we discuss on this podcast, just hit me up with a direct message there on LinkedIn. Be happy to connect. One lesson I've learned in life is the more people you meet, you never know what opportunities can come out of it. Many times a relationship from 10 years ago, some fruit comes from it later on. So I just love meeting people and talking, man. So those would be the best places.
Outstanding. And I'll make sure those are in the show notes. John, appreciate you, brother.
My
Thanks,
pleasure,
man.
Stephen. It was great. Thank you.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.